Welcome to Recovery Report Live. I'm Dan Odess, president of GlobalPro, where we manage risk to recovery, and we've managed more than $1 billion in recovery. We are your one-stop shop for all your insurance services needs. We have been doing it for more than a decade, making sure our policyholders are getting what they deserve from the products they are buying for their businesses or community associations. We want to make sure you have all the information you can use. That's what the Recovery Report Live is all about, is delivering you actionable content every single week. Today, later in the broadcast, we're going to have on our very own Rob Bowlby to talk about what's going on in our Texas market and what to expect this winter season. But before we get there, we have 2 more weeks left of hurricane season. We have a clear tropics. Thank God we are moving towards the end of the season. It's been a long one, historically one of the longest ever. Since 1935, as we mentioned on last week's broadcast, there hasn't been a east coast of Florida hurricane landfall that's hit as a Category 1 since 1935, and Nicole was that. It was insult to injury. It was a lot of compounding issues that we see in the coastal areas. Of course, GlobalPro is right there helping our communities recover from this major disaster. But our efforts are ongoing. We continue to help those on the East Coast as well as the West Coast and Central Florida areas and up until the Carolinas and Georgia that have been impacted by Hurricane Ian. The recovery efforts have been fast in some areas, but mostly slow, whether it's the insurance company's response and proper adjustment of those claims, or the way in which contractors are responding to the needs of those that need the reconstruction services. Now, a lot of the things that we're seeing some of our clientele deal with or contend with is this idea that you can just pretty much use anything to fix pretty much anything else. So the reality it is that we need to restore these properties. And with the recent legislation session that left us in a horrific anti-consumer market where insurance companies are deciding how to fix or repair our roofs rather than building code or basic engineering construction principles in Florida, it's very much important that our consumers know what it means next year if they do experience a loss or damage. And as Florida is a bellwether state for a lot of changes, if it seems to work or make some logical sense at elsewhere through the country, like Texas and California and other places, they tend to sometimes adopt the changes that are made here. I don't think that these changes are going to be adopted. Why? Because they absolutely make no sense. And quite frankly, it doesn't look like the legislature is going to make any changes anytime soon. In fact, we're expecting an even worse session coming up in 2023 in Florida. We hope that in other markets such as New York and New Jersey and Texas doesn't follow suit like what they did and what they did here in Florida, and passing further anti-consumer legislation that is not intended to help anyone. But we're in Texas, we're in the Northeast, we're also out west, we're pretty much everywhere. That's why it's called GlobalPro, making sure our consumers have the information they need. And so that's why we want to make sure that you're aware of the changes as they're occurring and what you need to be looking for and how you need to be doing that, what you need to be doing as a consumer. One of the other things that we're seeing is a rising need for owners' representation. Well, there is an opportunity, and as part of this broadcast, I want to make sure that everyone's aware. Hire someone to help you buy insurance. If you're a business or a community association and you don't have a representative working on your behalf with the brokers, with the markets, negotiating, reviewing, analyzing your coverages, your loss history, think about it. It makes sense, right, to have an actual representative. And we're doing more and more of this work every single day. But again, we're not the only ones in the market. Competition is good. Go out there, do your research. You'll realize why GlobalPro is the best at what we do. But get representation, not only in the claims process, but also with placing insurance. As we head out of hurricane season and you're picking up the pieces and we're headed into the winter season, it's important to make sure that you're constantly reviewing your coverages and constantly looking at what is there to help you. Now, we are already seeing insurance companies reporting record profits, right? And where we focus most of our energy is on the commercial lines. And that's really important because while we are led to believe in this last Florida special session that the basis or the reason for it by the governor to order the Senate and the House back to a special session was to address the issues plaguing the homeowners market. If you read the actual order, it says it in it. But if you actually look at the laws, it's very different. A lot of them broadly apply to all lines of insurance, including commercial lines. But the truth of the matter is that we don't see the same issues plaguing the residential market that affect the commercial markets anywhere in the country, and that includes Texas itself. Now, I've mentioned Texas a few times, and as I just told you, we're going to have on our very own, and I want to bring Rob on to talk about what's going on in Texas, talk about the state of the market there, talk about the weather, Rob. We are getting out of the hurricane season, but as you have experienced in the past from the deep freeze, and I know that's a bit of a nightmare to your own family and those around you because you were impacted by it. What should we expect with this market? Are we in a bear market on the real estate side? Are we expecting a bad winter season? How can our consumers prepare?
Okay, well, thank you, Dan, and thanks for having me on. So this is that time of year when all of the various real estate organizations start putting together their predictions for 2023, and GlobalPro is a big part of the real estate industry in North Texas, and so we've attended a lot of those events. We've hosted clients at a lot of those events, but we've had some really interesting findings. And so the first one was 2 weeks ago. We were with the Dallas Builders Association. You may remember Phil Crone, the head of that organization, was on this show just a couple of weeks ago. But they brought in the head of the National Association for Home Builders, who's a really interesting individual and a key individual because he really has the Federal Reserve governor's ear when they talk about housing costs and housing demand when they're making some of their decisions as to what to do with interest rates. And so he had some really interesting predictions. So I guess we'll start off on a bad note and build to good news from there. Housing prices nationally, they're predicting to decline about 10% next year. Now, the good news for markets like North Texas and South Florida is those markets where you continue to have in-migration should not feel that total 10% decline, but more like a 5% decline. In fact, in Texas in particular, we have 3 of the 10 largest single-family home building markets in the country right now. Of course, those being Houston, Dallas, and Austin. But even those 3 are down, not majorly, but down kind of 7 to 8%, which is less than it is nationally. Interestingly, the one city, when I looked at that slide, the one city that was showing positive single-family housing development projected for 2023 was Charlotte, North Carolina. And it seems like a lot of companies are flocking to Charlotte. From a building cost standpoint, lumber prices have finally come down and are still coming down. They're currently below 2019 levels and came down 1% last week. So that should be good news for those of you that are collecting insurance premiums and trying to get things rebuilt. At least the materials cost will be coming down some. What's not coming down is labor. There's still a huge demand for construction workers, and so wages are still rising. From that standpoint, multifamily is still strong for the rest of 2022. But what I thought was interesting is there's 930,000 units still under construction across the United States. Their prediction is that when those markets come on and get absorbed, then multifamily will start to weaken a little bit in 2023. The one part that still looks really bright for the year ahead, which I don't really remember this industry existing so much until the last 3 or 4 years, was build to rent. There is a lot of single family building now that is just for the purpose of renting single family housing. That was usually done as kind of a one-off, but now you're seeing major national builders do an actual build to rent product. And that's, as we're going to talk about here in just a minute, a result of interest rates being so high that less and less people can afford a middle-class house. So that was the first thing we attended. The second thing I attended, you may know we're members of the Texas Real Estate Council. We hosted a great group of GlobalPro clients and friends at the event last week. They brought in the head of JLL's capital markets to talk about where interest rates are headed. And so, again, we've got some good news and I would say an overall optimistic ending there. So the prime rate right now is 7%. Prediction is that's going to go up another half point before the end of the year. And then probably one more half point in the first quarter. So we're looking at a prime rate of 8%. If you remember, we started off the year at 3.25%. Now, my background is in commercial banking for a long time. So before we got into the financial crisis in 2009, 8% was an average prime rate. So a lot of people are crying gloom and doom right now, but the country actually can effectively operate with an 8% prime, although they are predicting in 2024 rates start coming back down. But that has made it really interesting for the multifamily community because it has been a long time since anybody's operated in a 7 or 8% interest rate environment. And I was talking with a large national multifamily owner last week, And he made a really interesting comment. He said, we are currently hedged, so this run up in interest rates isn't really impacting us. But when we have loans mature in the next 12 to 24 months, we're going ahead and starting to cut distributions from our investors, because we need to start reserving capital to buy those hedges, because those hedges, which cost us almost nothing a year or 2 or 3 years ago, are now costing us millions and millions of dollars. And that was one thing I hadn't thought about. I thought about rates resetting, but I guess I had forgotten that a lot of times these large apartment complexes are financed with agency debt, and they require them to have their interest rate exposure capped, and those caps cost money. So that's probably not something they budgeted for. So that's why insurance costs are going to be very important for this industry going forward in 2023, as it always is. But, I think we're getting into more of an environment that's going to shake out the really bad operators. It's hard not to make money when rents are growing 10 to 15% and your debt cost is sub 3.25%. It's a lot harder to make money when rents are flat and interest rates have risen to that 8% level. So I think we're going to see a lot more operators focused on all of the cost in their organization. And so that's one thing we're out talking to people about, is you really need to make sure anytime you have an insurance claim, you're not taking that first offer the insurance company gives you, but hiring somebody to advocate for you so that you make a full recovery and can really restore the property to pre-loss condition without having to tap into your reserves, or else worse, make a capital call into your investors. So Dan, you heard me talk a little bit about what materials costs are here in Texas, and I think they're probably a good gauge of where they are nationally, probably everywhere except for Florida, because you guys have had 2 major events down in Florida in the last 4 weeks. And so I know every contractor has descended on that market to try to help the homeowners and build some book of business for themselves. What are you guys seeing as far as reconstruction costs down there?
Well, Rob, you make a lot of great points here, and I definitely take from that. Definitely want to highlight your comments regarding the multifamily, because you definitely in this market, just like in Texas, a lot of focus there over the last several years. So some awesome information. As far as construction costs go, the difficulty we see is that while prices of materials have generally come down, the cost of concrete has continued to stay high. And we have this migration that's going on with regards to our labor, right? Our skilled and our general labor force. Migration meaning that it's moving around to its greatest demand. And the greatest demand isn't always the worn-torn areas from the hurricanes. So what we are experiencing from Hurricane Ian is that while there was a heightened demand, obviously, from the destruction, there was already enough work and people making so much money already that's already baked into contracts that they were not willing to extend themselves and go work on the West Coast. And typically we would see the migration move towards those markets and those opportunities. And while the Department of Financial Services ran this massive campaign, and you can see it visibly in the area where they have these signs in the ground about unlicensed contractors, and and the penalties and jail time that you could face for doing it. I'll be honest with you, when we're on the ground, you're not hearing as much about it in the solicitations that you would have otherwise with some other prior storms, okay, where you would have seen it. I think that people are still paying a higher price for labor in the South Florida markets and Central Florida markets, more so or comparable to what they would be getting paid if they were to chase the work or business opportunity that is in these areas that are hit by the storm. So I think we have the markets fighting with each other. We did definitely see an influx of contractors from outside the state of Florida, contractors from other states coming in, but those are a lot of the same people that we typically see after a major storm, because that is their central business. But we don't see, which did get a lot of press and a lot of attention, is the unlicensing contractor issues that where allegedly there's some giant sting operation going on, whatever else. It got quiet and we didn't hear any more about it after the initial few weeks. Just like our beloved CFO calling public adjusters and contractors locusts and predators. He's now since then done a reverse on that and said, oh, well, just like there's bad insurance companies, there's good ones, and just like there's bad public adjusters, there's good ones, in a recent follow-up interview to his statements about predators and locusts. So, I kind of getting off on a tangent, and that definitely answers your question. You know how when you get me riled up and wound up, Rob, I tend to get off on these tangents. But the point I want to make is that we have seen a definitely a drop in the cost of most materials, still a higher cost of concrete in the Florida market, but I think the cost of labor, whether skilled or not, continues to be the issue. And there's some analysts I've seen out there, I'm not going to opine on this, but argue that it's because of the cost of living issue. There's just not anywhere for these people to live. They're coming from farther away to provide the services. And so that's kind of baked in and working against a lot of the issues. And I can say that there is a major workforce housing issue on the West Coast already, even before the hurricane. You can only imagine the situation now when they've lost so many properties, particularly in an area like Fort Myers where you did have a major workforce. You see a lot of that. So dramatic impacts there. I know, Rob, you're in the process of maybe moving and going through that process yourself, and have seen some of the market. What's it been like in Texas?
That, and again, a lot of this comes from our exposure to the Dallas Builders Association. But yeah, even with this 10% housing drop next year, the long-term prediction for single-family housing is it still has to grow, and it has to grow at a fairly rapid clip because there's still not enough housing in America. That's particularly true in some of these larger, more urban areas. But right now, that's why there are 930,000 multifamily units under construction, is because people need a place to live. And back when interest rates were 3.25%, people could afford to buy a place to live. Now that a 30-year mortgage is north of 7%, more and more people are going to rent. So I think you're right. Housing, workforce housing, that continues to be a problem. It's going to be interesting to see how the banks react to this financial crisis. My suspicion is on the commercial real estate side, they'll pull back because they always do tend to pull back when there's uncertainty in the market in the commercial real estate side. I think just the current regulatory administration will force them to continue to push additional low to moderate income housing into the market. And hopefully that will solve some of the workforce shortage problem to make sure there's mortgages available for those people, maybe with little to no down payment, so that they can get into a house. The catch all of that last time was there was always little to no down payment loans available, but they were coupled with no income verification. Those didn't work out so well. But I do believe there's a place for these programs that encourage home ownership by not requiring a full 20% down payment, but you still have to prove that you can afford the mortgage.
We all have short-term memory, Rob. I have no idea what recession you're talking about. That was the other housing bubble? I mean, everyone's killing in the real estate market. Well, Rob, I got to ask you how does the weather play in this, right? We're moving out of the tropics. We're going into the winter. What's the outlook look like for Texas?
Well, so we had about a very enjoyable week of enjoyable fall weather. So it went from the typical 100 degrees in Dallas to we had about a week or so of 70s or 80s, and now we're back in the 40s already. So winter has come to North Texas. We are projecting to be down in, I think, the high 20s this Saturday. So this will be the first freeze of the season this year, which is a little earlier than normal. I was doing some research in preparation for this just to see kind of what the overall prediction is. They are predicting a colder winter than normal for the 2022-2023 winter season. Coldest periods being in mid-January and early to mid-February, as they were last year and 2 years ago for the major Texas freeze. Precipitation will be below average, but we are predicted to have above average snowfall just in the northern part of the state, which would be in Dallas. So that'll be interesting to see what happens. That's one of the things my family, who moved from Miami to Dallas, Texas, has really enjoyed about Texas, is we usually get to see snow at least once a year. As you know, Dan, we like to promote all the things that homeowners and commercial business owners need to do to get ready for the winter season, and we'll be posting that on all of our social media later this week. So I'm just going to throw out a couple that we've actually had some experience with over the past couple of years here. So the first one, we'll start with just 2 or 3 for homeowners. Cover outdoor spigots. That seems to be a big thing people forget about. I remember our first claim of 2022 was a lady who left her hose bib that was attached to her house. It was on the outside wall. The TV room froze and flooded the entire TV room. So make sure you cover those outdoor spigots. For those of you that were part of the Texas freeze, you know what a water key is. You need a water key to turn the water off as it connects from the street to your house. If you can't turn the water off, that's a bad day. And I will say that after 2 years, I bet tens, if not hundreds of thousands of Texas homeowners own water meter keys that probably didn't own them before the Texas freeze. If you don't have one, you can usually get them at Home Depot. They're about $5 to $10. You should have one. It can make a big difference to how much flooding happens in your house should a pipe burst. And the last one is just keep the water flowing. That's one that, our parents think about, our grandparents think about. A lot of times people think, well, I don't have to worry about that anymore. No, particularly in markets like Texas, where it doesn't get down in the tens and teens very often. But if it does for a long period of time, your pipes are probably going to freeze. And so make sure you keep water dripping. That's something your grandparents used to do, something you still need to do, particularly here in North Texas. For the commercial property owners, check your HVAC system. That's something that needs to be checked as you go into the winter season. Make sure you have a disaster recovery plan, particularly for those of you that are operating either large office buildings or large multifamily communities. And this is one people don't think about. Talk to your tenants. As you go into the winter storm season, just send an email out to your tenants and say, hey, we're getting ready to inspect the property, but is there anything you see out there that you think needs repaired? Because they're your best eyes and ears. They know what's going on at that property all times, even if your property manager doesn't. So we're enjoying this little bit of cold weather. Who knows? We may get a white Christmas this year, but we're enjoying not being in 100 degrees here in Texas.
No, Rob, it's great information. I love how you ended on that final point about communication. I think communication is so important, and not only with tenants, but also your employees, right? Just make sure that your employees are aware of what your plan is in the event that something were to happen. What's going to happen? What's next? What should we do? Should we come to work? Should we not? Who are we calling? What services do we need to bring in? Because maybe you can't be that point of contact. Who's next in line? Who's going to make that phone call, provide access to get into your commercial buildings and your properties to make sure that the damages can be mitigated? And for you community associations out there, making sure you have access, making sure you have clear communication with your actual the tenants of your owners or the owners directly is so important in making sure that your recovery happens quickly. And I will tell you, one of the biggest delays we have seen, certainly from this hurricane season, have been delays in getting access to property because there's no open line of communication to either owners or owners and their tenants. And it's caused problems because the tenants or the owner, one of them changed the keys or changed the access to the property, and no one can get in, and then the block needs to be broken, and then all the grievances that come thereafter. Avoid these disputes, avoid these issues. All great information. Hey, Rob, thanks so much for coming on today, man. It's been awesome to have our very own president of the Texas market there. Thank you so much for joining us, Rob.
You're welcome. Thanks, Dan.
All right, guys. Well, that was a great session to talk about all things Texas. Big focus there as we shift into the winter months. It's really important that we are taking steps in various different markets to make sure that we protect our properties and protect our businesses from damage. Being down is not fun. Being out of business is worse. So avoid the fate of that. And if I showed you the statistics on how many businesses go out of business that suffer from a lack of insurance or coverage or a plan to actually rebuild or recover from loss and damage, you would be blown away. And we'll make sure that that information is available in the description so that you're aware of where you sit in your actual planning. And obviously, Rob and his whole team in Texas are available to you. Let us know what we can do to help you, and make sure that you're following us on all our social media. Make sure you hit that subscribe button on YouTube, like us, follow us on LinkedIn, Facebook, Twitter. We're on all the platforms, making sure this information is for you. We're right here, same place, same time next week, right here on the Recover Report Live.